Hello and a warm welcome to this week's edition of Invest Africa. I'm Bronwyn Nielsen. Well, it's regarded as the world's second largest cocoa producer, and after South Africa, Africa's biggest gold miner. Ghana is one of the continent's fastest growing economies and the newest oil producer. This week we unpack some of the challenges and opportunities that this West African country is facing.
Bordering the Gulf of Guinea between Cote d'Ivoire and Togo, over 25 million people inhabit approximately 230,000 square kilometers of land. Well endowed with natural resources, agriculture accounts for roughly 1/4 of GDP and employs more than half of the workforce, which are mainly small landholders. The services sector is a significant contributor and accounts for 50% of GDP. Gold, cocoa and timber exports to France, the Netherlands and USA are major sources of foreign exchange. Imports such as capital equipment, petroleum and food products are sourced mainly from China, Nigeria and the US. The number 2 grower of cocoa was one of the world's fastest growing economies in 2011, after pumping oil for the first time at its Jubilee field in November 2010. This sent GDP soaring by nearly 15%. Sound macroeconomic management, along with high prices for gold and cocoa, also helped sustain GDP growth between 2008 and 2011. Ghana's economic growth is expected to slow down this year and cool even further in 2013, with growth expected to post at around 8.2% and 7.7% respectively. A key risk to the fiscal outlook for 2012 is the possibility of higher public spending and wage pressures from the implementation of the new pay policy. The West African country has remained an oasis of stability in a region that is plagued by coups and civil unrest. Ghana further solidified its political maturity after the death of Ghanaian President John Otta Mills. Ghana's Vice President John Mahama has since assumed the role of interim president. Even though analysts are not reporting on a significant impact by the unforeseen incident, the world is watching closely to see if the words of the late President Mills will be echoed by the new leadership.
I hope that by the time I leave office, I would have helped to raise the living standards of our people. I would have helped to consolidate democracy, rule of law, justice, etc. And above all, I would have left behind me a peaceful and stable Ghana with the right kind of atmosphere for attracting investment.
Well, joining me in studio to take a closer look at Ghana as a business and investment destination, Thabo Ngalo, Portfolio Manager, Stanlib Africa, Equity Fund, and Grant Hatch, Executive Director, Strategy Practice at Accenture, Southern Africa. Gentlemen, thanks very much for your time. Well, certainly the late President John Otta Mills making all the right noises there in terms of what he was saying. Are we seeing, I know this is very new in terms of news flow, his death 3 weeks ago, but are we going to see the same policy implementation from the now interim president?
I think, Bronwyn, we will, because I think the fact that the transition was so smoothly handled, I mean, there was a plan in place that the vice president stepped in, took on the role as interim president. The fact that both the political parties vying for it are actually very similar, centrist type parties bodes well for continued stability in Ghana, and that's one of the reasons why, as you highlight in the introduction, that GDP growth has continued at quite high rates because of the high degree of political stability in quite an unstable region, which is quite appealing for investors.
Thabo, this isn't a huge setback in your opinion?
No, I mean, I mean, for us, it's definitely not a setback. I think the primary reason for that, as Grant also alluded to, is it's a handover from the president to the vice president. They're in the same party. So, I mean, I think also if you look at it, he's essentially the caretaker president for the next 6 months or for the next sort of 5 months until the elections in December. So, I mean, we don't expect much in terms of policy change. I think he'll continue as planned for the next couple of months till the elections. And I think the real deciding point, I guess, will be what happens in December, because as we know, Ghana is a highly democratic country, and I think the split between both political parties, the NDC and the NPP, I guess is very small.
So we can certainly expect fair and free elections with not much policy change in terms of who comes into the hot seat.
Absolutely.
Grant, I love Ghana. I've been up in Accra recently and I found it an amazing city. Everything seems to work incredibly well. I think it certainly deserves the accolades that it's been given as an investment destination and a hot investment destination. What do you deem most exciting about the territory?
I think what's interesting is when you arrive for the first time at the airport and you're used to the sort of somewhat chaos of African airports, and as you arrive and walk out, someone orderly tells you to keep moving. You know, and there's structure and order in the country. You get that sense of it from the time you arrive at the airport from the outset.
Absolutely. Even the visibility of the infrastructure, everything looks as though it's established, moving in the right direction without the chaos that you sometimes encounter when you're traveling.
Airports. Yeah.
Thabo, in terms of obviously the top cocoa producer, big oil discoveries, that giving the economy a big kick, do you think we are going to see this country rather starting to trailblaze?
I think it will. I mean, if you look at the figures you know, on the inset that was shown earlier on in the inset, it's still showing growth of 8% or 7% for the next 2 years. And, you know, it might have fallen from 14%, it might be at 8%, but 8% is phenomenal by
in this environment,
by any measure,
8% is absolutely,
exactly,
we'll take any day.
So I think we'll still see rapid growth, and I think as well from the rapid ramp up of oil. I mean, if you look at Ghana now, if you speak to the likes of Tullow Oil, which some of the companies we speak and invest in, I mean, Ghana is looking at about 80,000 barrels of oil a day, you know, in terms of production. So I think as that ramps up, you know, to the likes of Nigeria at 2.5 million barrels, you know, I think you're going to see growth without a shadow of doubt. You're going to see growth, you know, from the agriculture space. Food security is a big issue. So I think Ghana will continue to grow. I think we still expect a lot of growth going forward from just the primary industries and services as was shown earlier as well.
How much interest are we seeing in the agro-processing environment in Ghana?
Well, I think it's across the whole region, because I think what's really driving investment in agriculture, and Nigeria sort of have this problem. So it's really interesting, the parallels between what Nigeria went through and Ghana is that basically, you know, there's a lot of food import into countries like Nigeria. So the question is, how quickly can countries develop their domestic agriculture sector, reduce dependency on food imports, you know, to reduce dependency on maize and commodities that are traded globally is really the key challenge. So the big question for Ghana is, having discovered oil now, do they go down a different development route to the one Nigeria did, where they focus strongly on oil at the expense of agribusiness and agriculture, and then have to correct later? Or do they actually continue to drive their sort of domestic agriculture sector? I mean, but given the point about political stability, my sense is that they are going to get this right, because they're already doing a lot in that space, investing in agriculture, and they've got a lot of arable land still to develop, so it's encouraging.
Do you believe, as Grant puts on the table, that they will get it right? They're not going to neglect the agri-environment now with this discovery of oil, because it's a sexier environment.
You know, we hope they'll keep the focus, and I think from all signs, from what we've seen over the last 2 years, I think, since oil was discovered, that will remain a primary focus in terms of agriculture and other sectors of the economy. So, you know, essentially what's known as the Dutch disease, we're effectively not seeing it at the moment in Ghana. So, I mean, we're hoping, you know, agriculture will continue to be the pillar of the economy, but I think from our perspective, what we want to see is more commercial agriculture, and I think we want to see a bit more investment from companies and from banks especially. You know, if you look at the agricultural sector in Ghana now, you know, it's quite reliant on rain. So if you've got a bit of a dry season, then the cocoa production falls. So what you want to see is a bit of irrigation, a bit more organized agriculture, so that whether there's rain or not, there's still irrigation systems in place. You know, they can keep up the production where it should be. So I think these are some of the companies. I mean, when you speak to companies, for instance, like Benzo Oil, which is also a listed company, Benzo is a palm oil producer. So I mean, some of the agricultural players are out there, and you know, they're just waiting for opportunities.
What about the regulatory environment? Is there anything there to discourage? As you say, you would like to see more commercial farmers in country. You would like to see more investment from the private sector, from the financial sector. Is there anything at the moment that doesn't sit right with foreign direct investment on any of those fronts?
I think it's coming in slowly, but I think it's not fast enough. I think what we've seen, unfortunately, is more FDI into the services sector, mainly banks and hotels and what have you. But agriculture, not as much. Agriculture is still still a very, highly political sort of a discussion, I guess, as well in Ghana, because you're looking at a lot of small-scale farmers in Ghana, a lot of outgrowers the growers aren't just, it's not just one big farm, I guess. It affects many people in terms of many small producers, I guess, in communities. So it's still not, I guess, as developed, I guess, perhaps in terms of just allowing perhaps a lot more commercial investment, but I think it's coming.
Looking at the free trade enterprise or the free zone enterprise, it sounds like that's the way to go if you are setting up a business in Ghana. Effectively, you've got a 10-year tax holiday. Those kind of things make me very excited. Should we get excited about how you can do business?
Well, I think there are two things, Bronwyn. One is actually the macro trend of the borders becoming much more porous. I mean, I think one of the issues, and it's actually been driven by a slowdown in Europe, is that Africa is starting to trade much more interregionally, and actually the extent to which borders come down and helps a lot. So the fact that Ghana is contiguous with Nigeria helps a lot in terms of that sort of regional trade, but also to what extent government policies actually stimulate local free trade zones and the tariff protection they put in place and the incentives, that has a huge impact on how domestic industry from agriculture to manufacturing will develop. Depends on those incentives.
They're making the right noises, though, again, going back to what the late president was saying earlier in the show.
Yeah. They're making the right noises, and I think even just, Ghana is a very progressive country from, I guess if you compare Ghana to almost every other country on the continent, it's quite progressive from a political perspective, from a policy perspective as well. I think the way they've handled as well, if you look at the way they've handled the oil concessions in the Jubilee fields, it was very mature, it was, allocated fairly and transparently, and I think it's something you rarely see across the continent. So Ghana is a model country, I think, and I think it's, some of these policies will come. I think at the moment the priority has been on oil, which is sort of clouding the rest of the economy. But as you mentioned, when you get to Accra, it's fantastic to see just outside the airport, the new Holiday Inn hotels, the infrastructure that's growing. So, the country's moving forward, and I think it's just a matter of time.
What are the problems, though? There must be some problems that still arise.
I think everywhere, you've got problems, and education is still one big issue. Literacy is still one big issue, and I think there are a lot of issues that still affect the communities and population in Ghana. Infrastructure is a big issue, I think infrastructure is a big issue all across the continent, and I think when you just travel a little bit out of Accra and you drive out to Cape Castle or to Takoradi or anywhere else, you start seeing the road infrastructure needs upgrading.
So you're saying Accra belies what the rest of the country looks like. Don't take Accra as an indication of the infrastructure development across Ghana.
That's true. I mean, it has to start with the capital cities naturally, but I think it has to spread as well across the country. Yeah.
But I think the infrastructure question is really important, because if you look at the development in Ghana, it has been, there's been a lot of development around elections and also events like sort of Africa Cup of Nations, and then the infrastructure is developed to a point and then stops. So there's also a lot of shells of half-built hotels also around the airport in Accra that need to get developed. And also to develop the infrastructure out to support agriculture, because you're not going to create a vibrant agriculture economy without linking small-scale producers to commercial producers to supply chains and getting that integration working effectively.
We're going for a quick commercial break. More on Invest Africa when we return. Stay tuned. Welcome back to Invest Africa. After decades of substantial but sometimes difficult progress, Ghana recognizes that it still faces important challenges in its developmental trajectory. The World Bank, among other institutions, aims to assist Ghana in order to sustain economic growth, reach the Millennium Development Goals, and move forward in its efforts to attain middle income status.
Ghana's commercial oil production is expected to transform the economy and attract an influx of strong foreign direct investment in the future. This has put the country in the fiscal space to start looking at non-concessional sources of financing, and has also prompted African institutions to reaffirm their role in contributing to Africa's growth story.
I think what Africa needs at the moment, most African countries do not have the long-term domestic savings that would provide long-term, low-interest funding for infrastructure. Right. And that's where I think the ADB should focus on. How do you provide transportation infrastructure? How do you provide irrigation? How do you provide power?
August 2011 saw the Ghanaian parliament approve a $3 billion loan from the China Development Bank. This marked the largest facility ever secured by Ghana and will be used to finance the infrastructure gap identified in the National Development Strategy. But Ghana's pre-election macroeconomic challenges have raised concerns around the country's growth path.
Traditionally, Ghana's track record during election years in terms of macroeconomic management has not been very good. Typically, we see three key themes coming to the fore in election years, and those are fiscal slippage, where the government typically tends to miss its targets. With the increase in spending, inflation edging up towards double-digit levels again, came in at 9.4, the June number. And we also see persistent currency weakness. The currency is depreciated just under 20% for over the course of 2012.
And the widening of the fiscal deficit may add to investor uncertainty and place further pressure on the already weakening currency. Decisive leadership, unwavering economic and political reforms, and investor confidence are key to unlocking Ghana's economic development. Dumisha Makhanyele, Johannesburg.
Still with me in studio, Talabo Ingalo, Portfolio Manager, Stanlib Africa Equity Fund, Grant Hatch, Executive Director, Strategy Practice, Accenture Southern Africa, and joining us for the second half of the show, Alex Darko, MD of Cardo Consulting. Thank you so much for your time again. Well, the equity markets, we haven't spoken about the equity markets in Ghana. I assume that the trend is again an illiquid one with very few companies listed. Is that the reality?
Yeah, you know, and unfortunately, like Ghana, like most countries in Africa, you know, the GDP of, if you look at the country's economy in terms of GDP, is still not representative of what's on the listed market. So, I mean, as a typical example, if you look at the Ghanaian telco space, you know, you've got MTN, you've got Tigo, you've got Airtel, in terms of the major sort of cell phone companies, but none of them are listed. So the stock market is not really representative of what's happening in the economy. Luckily, at the moment, you've got a dual listing of Tyler Oil. So unfortunately, you know, the growth that we're seeing in the economy is not really feeding into the market. And I think the biggest issue we have in Ghana is the liquidity on the market. So the stock market is unfortunately not very liquid. It's still very tiny, and we still suffer from a situation where a lot of the big companies like the Unilevers, Fenmilk, are still held by the offshore parent companies, and most of these companies hold in excess of 70% in some instances. So liquidity is still a bit of an issue, and I think the market is still not where it should be. And I think with a bit more development, I think we could catch up a bit over time. Yeah.
Alex, you were listening to the conversation in the first half with regard to infrastructure, and you wanted to add your thoughts.
Look, I think as my colleague said, infrastructure is a challenge, but the government has started making inroads into that. I mean, for instance, recently, I think, especially the rail system, because when you talked about agro-business, it needs the rail network to carry it. And recently, I think General Electric, has actually invested or intend to invest over $1 billion to revive the Maribon railway system. And there's this whole lot of other infrastructure projects that have to be in place to help the economy. So the road network is usually where in the past the emphasis have been, but in telecommunication, but particularly the rail network, if it's revived in the right way, would be an important addition to support the economic activities.
Is it going to be revived in the right way, the rail network?
I think it's been a long time, there's been a long conversation around the best way to do it. And I think obviously GE took its time to decide on whether and in what way to engage, because obviously they're looking for a commercial return. So if they can put the pipeline or the railway network in the places that carry the most traffic. Because for instance, you find Burkina Faso is landlocked, and a lot of its imports and exports go through the ports in Ghana. So the railway network, in addition to supporting what goes on in the country, would also be a trans-Africa type rail network, and I think that would be a useful way to earn revenue and justify the investment.
Grant, let's speak about Ghana in the context of West Africa and how important the country is to that region.
But I think it starts with the question Tabu raised about liquidity. I think that a lot of companies make the decision to list on a regional stock exchange, and Lagos is often more attractive. So I think the challenge for Ghana is how does it position itself with its larger and sort of more dominant economic neighbor, and to try and to the point about Alex raised about getting the rail networks integrated, getting the cross-border trading working. I mean, borders are still very difficult to move products through ports. I mean, there's still long delays in the sort of upper ports. So, you know, to the extent to which Ghana can work with the Nigerian side and actually create a sort of more regional focus around things like agriculture, around manufacturing to move those products. I mean, that's really going to be the key to unlocking the whole region, rather than Ghana develop on its own and Nigeria developing separately. In fact, Ghana has more to gain by integration with Nigeria because it's a much larger market. I mean, you've got 150 million people versus around 25. So it makes a lot more sense for Ghana to do that.
This is a big theme we've been discussing of late. Is that integration happening specifically between Nigeria and Ghana?
Look, I think the framework that has to help liberalize that is the ECOWAS, the Economic Community of African countries. There are some structures in place, but in terms of making track into the specifics, I think that the bases are there. It's a lot of liberalization in the banking sector. A lot of Nigerian banks have, for instance, opened up business in Ghana, and that I think, and the oil flow as a source, before the Ghana found its own oil, Nigeria has been a major source of, so there's a political engagement, and that then supported by the commercials, I think that's going to be the way to go. But it's something that has to be pursued and pushed.
When you're looking to invest in companies in Ghana, what are the highlights and what sectors are your focus?
You know, if you look at the market in Ghana, obviously the banking sector, at the moment you've got 8 banks listed on the stock exchange. So the stock exchange at the moment has 34 companies, 8 of them are banks. So if you look across, the banks are quite important. You look at obviously some of the indigenous banks, like banks such as UT Financial Services, which now has a banking arm called UT Bank. You look at Standard Chartered Bank. So I think those are some of the names we'd be looking at. We're also quite interested in the consumer names. You know, Guinness is quite interesting on the market in Ghana. Unilever is quite interesting. I mean, this also plays.
So the branded goods environment is a big theme.
It's a big theme. I think it also this plays into the the whole theme. I guess everyone sees and talks about. The African consumer is rising. You know, you look at companies like Fen Milk, which produces ice cream and milk and what have you. And these are fantastic businesses that are well run. That are just huge opportunities for investors such as ourselves.
And Grant, when it comes to advising, consulting in Ghana, what areas are the hotspots?
Well, I think it's as Thabo said, a lot of the multinationals are looking at entering Africa, so they look at East and West Africa, and if it's West Africa, the decision around do they go to Ghana or Nigeria and center their operations there. And it tends to vary. I mean, what we've seen is a lot of the German companies tending to favor the sort of Ghana because of the living standards in Accra are seen as better than in Lagos. A lot of the multinationals, look at P&G, Unilever, have started really focused on Nigeria because it's a much larger consumer market. So it does vary, but across companies. But I think all of them have in mind the view to actually how do they serve both markets? Do they build operations in one country and then SOG the other? But they do tend to view it as a regional focus because that's where the combined market is much larger.
A theme we're starting to roll out on Invest Africa is asking the experts what business they would start in country. And that gives us a very good indication of where you would put your money. So Alex, that's the question to you. Okay. $100,000, where would you put it in Ghana? Or what would you start? I
think one of the businesses that has already started, but I think I would look to get into, is the whole outsourced market. I know education is still an issue, but historically, education was made free and compulsory at the point of independence. So there's a high educational culture in the country. And also there's a whole lot of returning experts who had gone in the past because of the political environment or the economic environment are returning. And there's a high interest. A couple of years ago, the BBC did a survey and found the number of internet cafes in Accra alone was literally in the hundreds. And there's a whole lot of interest in IT business. So I think the language is English, people speak English. There's high literacy in IT. And therefore, if you have a business, and also the time zone for most of the places, either in the US or other places. So the outsourced support type environment where people are looking for high-end support staff to support their products and services, I think that would be a business that I would invest in.
You know the question. What's the answer?
Yeah, I agree with Alex on the IT part. I think there's going to be a focus on developing shared services and business processing around hubs, and Accra could compete very effectively for that, as Nigeria would. The other area I'd invest in, but I'm going to need a lot more than $100,000. I have to speak to Stanley. Is investing in the agriculture sector, the sort of value processing part, linking the primary.
We're up it now to $1 million, $2 million. Would you be happy with that?
Into agri-processing. I think there's huge opportunities linking that into the back end of the consumer goods supply chains around primary conversion.
Thabo?
I think, you know, I think if everyone else is asking for a bit more, I think can I get 110 million or 100 million even?
We're going to get it from Stan Lim.
But I think for us, I mean, in addition to the, you know, the sectors mentioned, I think the consumer sector is one I'd be keen on, and primarily because it's a defensive sector. You know, I think from our investment philosophy, we focus on companies that have very solid earnings profile and that are defensive and perhaps that can generate quite a lot of cash. So if you look at the consumer space, you know, companies that produce milk, you know, the daily staples, you know, whether there's a recession or not, people still need toothpaste, still need milk, still need, you know, juice and what have you. So I think those are some of the companies we'd look at, and some of the companies I'd be quite keen, you know, to put a bit of money in, yeah.
A bit of money. You're asking for $10 million. That's all we have time for on this edition of Invest Africa. We'll be back again at the same time. Until next week, from me, Bronwyn Nielsen, and my guests, it's goodbye.